Have you ever entered a trade, it goes against you, hits your stop loss, and then goes directly in the same direction you thought it originally would? A lot of beginners just think that's bad luck, but most of the time there's actually a reason. Today I'm going to teach you guys what liquidity is. Don't worry if you've never heard of that word before. By the end of this video, you will know exactly what it is. What is liquidity? Let's keep this as simple as possible. Liquidity is just orders waiting within the market. Whenever someone wants to buy, that's an order. And whenever someone wants to sell, that's an order. When someone places a stop loss too, that's also an order. All of these orders together create something called liquidity. So whenever you hear the word liquidity, just think orders waiting to be filled. Here's a really easy way to think about it. Imagine you have a magnet. Now imagine throwing a bunch of paper clips on the table. What happens? The paper clips are naturally pulled towards that magnet. Well, liquidity works in the same exact way. When lots of orders are sitting in that one area, price often draws to that area. Now, price isn't actually a magnet, but think of liquidity as a magnet because it will help you understand it much easier. Now that we know what liquidity is, let's actually see where it forms on the chart.
Alright guys, one of the easiest places to find liquidity is around highs and lows. A high is simply the highest point price reached before starting to come back down. So we have a high right here. Why? Because we have a candle up, then a candle down, and that created a high, right? This is a high. Now a low is simply the lowest place price reached before it started moving back up. So down here we have a downwards candle, then an upwards candle, and that created a low. So guys, just for some visuals here, a high is a up down, highest point is why we call it a high. A low is a down, then a up, lowest point is why we call it a low. Now back to this example, circling the low for you guys here. This thin line is called a wick, right? This line right here is called a wick. And that is what's actually creating a low for us. And I'll explain why in a second. So what you guys have to understand is the bottom wick shows the lowest price sellers pushed the market before buyers stepped in. And then the same thing for a high, right? The very top of the wick is the highest price buyers pushed the market before sellers took control. Why does liquidity form the way it does? Well, using this example of the high, thousands of traders are trying to enter at the same exact time, but orders that were not yet filled turn into these wicks, which turns into the things that we call liquidity. Now, the very interesting thing about how the market works is that price tends to draw towards areas of liquidity. Why does price move there? So big trading firms are basically the same way, guys. They buy and sell very large positions. To fill those positions, they need lots and lots of orders. So that's the reason price often moves towards these areas, because of the liquidity. There's a lot of orders in that area. So in this example right here, we have a low over here. And what did price do? We literally drawed to that area and then came up out of it, which is what we call liquidity sweep as well. And we will have a separate video on that. So I'll show you guys another example of us drawing to liquidity now that you guys know how to identify it. So we have liquidity right here. And what does price end up doing? We end up drawing to that liquidity. So we ranged for a moment and then came down into this liquidity. And then if you notice, guys, there's a simple pattern. We keep going up after we take out that drawn liquidity. And that's what we call a liquidity sweep. There's an important clarification. This doesn't mean that the market is trying to stop you out. The market doesn't know who you are, guys. It's simply just moving towards areas where lots of traders have placed their orders. So don't take it personal when you get stopped out. You just have to know where to place your stop losses according to where liquidity is resting. So now moving on to the next thing. What is a liquidity sweep? And we kind of just went over it, okay? So I'll draw this out for you guys as I explain this. So a liquidity sweep is basically when we take out pending orders and then we want to move back up in the opposite direction. So this is a lot of liquidity right here, right? So there was a lot of people trying to go short. So we're able to take out all the people that are trying to go short by going higher, taking out all those orders. And that is a liquidity sweep. Now, don't focus too much on the orders, the pending orders, the people is trying to take out. Just definitely focus on how to identify a high and low and understanding that liquidity is a draw in the market. It is a magnet that price constantly pulls to, guys. I'll show you guys a few more examples of liquidity sweeps despite us having a separate video on it. So let's switch our time frame here to the hourly. All right, what do we have here, guys? We have a move down, then a move up. That created what for us, guys? A low. So let's mark out a line right here, or I'll rather use this, right? And then you guys see what happens. We end up drawing to that actual range and that line of those pending orders, right? So this is how market tends to move. I'll show you guys one more. Same exact thing over here, guys. So we have the resting orders over here that were not yet filled, and price decided to come down into it and take out this liquidity. And what did it do after? it went higher right after it took out that liquidity. That is what we call a liquidity sweep. And that is what market tends to do over and over again. Don't worry, guys. We will have a separate video on liquidity sweeps, but today's focus, we're just focusing on what liquidity is and how to identify it. Here's the biggest beginner mistake. So a lot of beginners see price move, for example, below this liquidity, and they think, okay, market is just going to continue going lower. But what you have to understand is price only moved there to collect the people that were trying to short and then eventually go higher. So that is why you see a liquidity sweep after us taking out all of the liquidity from this ranging motion. And guys, this is why it's important to wait for confirmation instead of just chasing every single breakout from liquidity. Because say, as a beginner, I was like, okay, we took out this liquidity, or maybe even better, we're up here, we're going to take out this liquidity and we're going to go further down. Well, unless you have liquidity to the left side to really confirm that, then that's not an accurate thing because as you see, we went higher after we took it out. So let's connect everything together, guys. Candlesticks are showing us what price is doing. And we also talked about time frames in a different video as well, explaining how they close at different times according to what time frame you're on. Breakup structures are a confirmation that can show us we want to continue in a direction. And then liquidity sweeps are basically us just targeting certain parts within the market that we want to go to, whether we continue going in that direction or whether we just take it out for a time being. So once again, guys, you see here is a draw on liquidity, right? What happens? We go towards that liquidity, and these aren't random. I can show you guys another one here. We come down, right? Then come up, we created a low. That is liquidity. What do? We took it out. And then after we took it out, we decided to go higher and then go back lower. So there's no telling how far you will go when you take out liquidity or how far you will go if you just decide to break through it. But the point is that it's a target within the market. Before we close this video, we're going to identify 3 more examples of liquidity just so you guys can get really good at identifying where they are and where they rest within the market, because it's extremely important that you know so you can identify where your take profits should be as well as stop losses. So final example number 1, we have a down and then we have a up candle, right? What did that create, guys? That created a low. So we're going to draw this line here. And what do you know, guys? Price chops a little bit, moves down to take out this liquidity of these resting orders, and then decides to go back up, which we will talk about in another video. Don't mean to repeat myself multiple times, but I just want you guys to know that that is important, that we are sweeping back up. And I don't want you guys trading just off of where liquidity is alone. You need to understand liquidity sweeps. So stay tuned for our next video. All right, guys, example 2, we have a move up, then a move down. So this created a high. What did we do? We decided to go up. Even after creating this, we decided to go down a little bit, but then go back up into it, take it out, and then go back down as a reversal. But understand, just for this video, how we're actually drawing to those spots, even if we're not breaking out and continuing yet. All right, guys, probably the best example of this video right here. So we have a move down, then a move up, right? Let's draw this out. What are we doing? We are literally chopping and then taking it out, drawing to that spot. It's like a magnet, right? And then sweeping out of it and going higher. These are just patterns within the market, and liquidity is one of the most important things you need to know for trading understanding.
So today you guys learned what liquidity is, where it forms, why price moves to it, and what liquidity sweeps look like. If you can understand this one concept, you will start looking at the market in a completely different way. In the next episode, we're going to build off of everything you learned so far, and we're going to deep dive into liquidity sweeps on a separate video. I hope you guys enjoyed. Please like, comment, and subscribe, and I'll catch you guys in the next one. Peace.